Welcome back to the floor of the CME Group here in Chicago, March 15th. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms with their overnight cash management. Wow, folks, let's get into the zone. Things are moving, they're moving quickly. You know, yesterday we talked about that three-headed monster. Well, guess what, folks? That third head came in and went chomp, chomp on the market. Dow's down a big number today. We saw that nuclear reaction component. That was what I talked about yesterday. And the real fear, they're talking about contamination, and that fear is really spread through the world markets everywhere. You know, we saw actually, you know, the S&P went down to that 100-day moving average. S&P was down about 35 handles. The Dow Jones down about 250 points. We've seen some movement off that, but you know, I want to quote Zero Hedge. He had a great tweet this morning. You know, on the open, every pundit was up there saying there's fear in the market, and we're all underweight the market right now. Well, guess what, folks? We bounced a little bit, and since that, the S&P's come back about 15 handles, and now everyone's saying maybe it's a buying opportunity. So there's a lot of moving parts. Be nimble, be quick in these markets. Do not get married to a position because they will whip around today all day long. But I think that, you know, with the Fed talking today, the question of the day I want to talk to, and hope you can comment here on this video, is what will Japan do? Obviously, the more the markets move down, the more possibility of QE3. So we'll see what the Fed says today, but the question of the day is, will Japan have to sell their $800 billion worth of U.S. securities, or will they lend us more money and buy some more of our paper? I think it's a pretty clear answer, but you tell me. Get me at The Killer on my Twitter account or comment this video. I want to know what you think, and I appreciate your thoughts. Let's drill down on these treasuries. You know, we've seen a continued flight to quality move here. You know, we got above that 100-day. I talked about that 100-day in the 10-year yesterday at 120.16. We rocked above it, folks. We went all the way up to 121.14.5. The 30-year took off as well, up to 122.14. So I think we're seeing this fear in the market. It's prevalent everywhere. And the S&P, you know, yesterday I tweeted out that 1296 level. That was the 50-day. It was a great sailing. And off that reaction, we saw it went all the way down overnight. I actually put a tweet out as I was making a pot of coffee last night around 11 o'clock that it should test that 1251 100-day moving average. That's the exact low. It rallied off of there. We've seen a really, really volatile market session, price action that we want as traders. So be careful in that market today. Euro currency, you know, I think it's a muted trade. We saw obviously a rally today, that weekly pivot we've talked about it. 138.72, but all the price action is in oil. Oil's down almost $3-4 today. So stay in the equities, be careful in the bonds. This market's going to move at the end of the day. So good luck from the floor of the CME Group. I'm The Killer. Remember, be the hammer, not the nail.